All right, good morning, everyone. Our Business Brews Tuesday today, we're going to talk about a financial foundation for small businesses and commercial lending. I would be your speaker today after you run the business. We also cover small business for commercial lending. We have our guest speaker, Ms. Ramon, the founder of Rakota Capital Funding. So stay tuned. This presentation is only going to be less than an hour. And any questions, you can feel free to type or chat on our uh, section. All right, I think we're having a technical issue here. Well, we're going to skip that. Common problem is when we're dealing with the IRS. So that's why proactive through education is our first step, especially on the taxation and the financial. So just a disclaimer that this material has been prepared for informational purposes only, and it's not intended to provide and shall not be relied for any tax, investment, legal, or accounting advice. Examples on the materials in this webinar are only for illustrative purpose and should not be relied upon technical answers. That Wycotax is a virtual outsourced accounting and wealth planning company, and Wycotax is not associated with any institution on this presentation and is a private business providing resources for small businesses. So before we begin, we would like to ask you questions like how many of you would like to potentially grow your money 400%? Right? So just type one if you want to grow your money 400%. But the best is the follow-up question is how many of you would like your taxes to favor you, not against you? All right, just type your answer yes. All right, if those two questions are answerable or you answered it yes, then you're in the right conference because on the different planning that we have is based on the IRS code that any money that grow to your life insurance, it's tax protected. So that's why the initial goal initially is for you to have protect your business. And sometimes well, a lot of times the asset of the company are the people from the CEO, from the managers. So you want to make sure that they are also covered by the right life insurance that will keep and help to retain them, whether it's your spouse, your manager, or maybe your friends that have been working for the company for a while. It's important for you to have them. We call that an asset protection, where, for example, a manager has been working there with your company and he plays a big role to run the company, and you're making, let's say, $1 million a year. So you have to secure the manager for at least another 3 million because that's usually times three of the gross income of the company. So if something happened to the manager, you're not gonna be having a problem of replacing, and any financially it takes a lot of money to replace someone, especially if they've been there for more than 5 years. And this kind of strategy of for the financial foundation as has been utilized by Ray Kroc, the founder of McDonald's, and also people from Disneyland. They also use this type of strategy. But before you move, you go forward with that, you also have to pay attention on you have like on even though you're spending so much on this, all of them cannot be expense out. So for example, you have 10,000 on your monthly, at least 6 months maybe expenses that you need to have on your emergency fund. Your company to secure the key people. So, for example, he's a doctor and he has a long time manager. What for this manager has been there for 10, 15 years because he know he's a valuable asset. Aside from salary of $100,000 a year, they want to also have a more long-term plan for the manager. So what they did is they put him in Keyman insurance. They called it a Keyman policy, which is $1,000 per month. So they enrolled him for a 10-year plan. So 12,000 per year times 10. So as you can see on the illustration, that is 100 total of 120,000 that they insure the manager as a key man. So that 120,000 is equivalent to at least 200,000 of that benefit. So whatever happened to the manager, let's say if there's this death, the manager passed away accidentally, then the company, the ABC company of the doctor will receive $200,000 or half of 100,000 because that is the value of a Keyman insurance. Here is the owner or the company owner, and the beneficiary is a split beneficiary between the company and the family of the manager. But if there's no debt that happened, then the good thing about this Keyman, it also accumulates cash through an index strategy. So therefore, the 120,000 on 10 years can grow a 7.02 in index strategy. So after 10 years to 20 years, the 120,000 is already equivalent to $337,000. So this is also like a retire the manager if you you're the boss and then you don't have 401k with him. This is an instant retirement money for him and the manager. Not to pull out the 337 at 60, and he waited until age 65 because sometimes they have tons of money. They don't need the 330 equivalent to 940,000 for 20 years spread out. In other words, at beginning 65, the manager 1,000. So if you multiply it to 20 years, that equivalent to $940,000. So that is a retirement planning strategy and also an employment strategy for your key people on this type of tax planning strategy where you enroll them in a Keyman insurance. And but the qualifier for this type of product. So of course the people are the executives, the business owner, husband and wife can also have a Keyman in the period that the couple is running the business. They need to have this type of policy. And then also you could have whoever or the chief technology officer or the HR manager, whoever fill in the manual position of the company can be qualified to ensure that your company will not cost anything when somebody on your manager retired, or even there's a chance there's any type of sickness or death with the employees. All right. So if you have further questions, their services, So yes, we work with your tax planning, compliance, your record keeping. We take care of that. Also, we one that we presented are the tax sheltered plan, like the Index Universal Life. That is the product that we're offering for companies with healthcare or even people that have other real estate companies, as long as you are an LLC with you. And then we also handle your tax at the end of the year by filing on time. All right. So if you don't have further questions, you could scan QR code on this station to book as an appointment. Our 30-minute 30-minute entry meeting, and all of you guys have just booked us online. We're going to talk about your financial position, the this session planning, and just got this QR code. And further, and I'm gonna have our November 13 mindful mixers here in Lyndon Johnson Freeway. Just follow us on Facebook, YCO Tax, to know our event, and our Eventbrite is also YCO Tax. So November 13 is a support for the different mental health organizations will be there. All right. Without further ado, this is our phase one of our presentation. We're gonna go with our phase two, the different type commercial lending, and the one that's gonna have this. Let me just share her PowerPoint.
Can they see you?
They can see it. Yeah.
Over there.
Let me just download this one. Oh, okay. There. Let me open.
You can open.
Yeah. Okay. Let me. So we're gonna go ahead with the commercial. Let me share this screen. Yeah.
But then I always take it back. Leads to it.
Oh, so you upload you download and then I can access this in the cloud.
So is it not opening or what's wrong?
Yeah, it's just
Connection lost. About what I do and how I believe the value of making moves so that you can turn your capital into real estate wealth. A little bit about me. My name again is Ramona Castle. I have been in the real estate industry for over 30 years. I've been a licensed realtor in Illinois, Maryland, and now I am licensed in Texas. I am also a hard money DSCR broker, which means I actually have money for those people looking to buy property, and in a I can do it with no money down. I am also a real estate investor, so I buy properties and rehab them, and either I've resold them or I have kept some as rental property. And I really, really love working with real estate investors across Texas. And recently, with the stand up of my company, Rakota Capital, I am able to work with investors nationwide. Hard money and DSCR are the two programs that I thought your group about today, Chris, because they're the easiest way for those who are not familiar with real estate investing to get in, and they can do it with minimal out of pocket. It is a two-step approach that most of my clients use, and I think it will be a great for someone that's looking to leverage their capital to get into real estate. I have lenders who will actually fund up to 70 or 75% of the after repair value of a property. And that includes the purchase price and the rehab. So what does that mean? What that means is, say you're cruising a neighborhood and every house in that neighborhood is worth $400,000. And then you stumble across one that looks like it's been abandoned, but it's in a $400,000 neighborhood. Well, if you can negotiate a purchase price and get with a contractor and get your rehab costs, if you can get the purchase and the rehab combined at $300,000 or less, I have lenders who will give you 100% of what you need to get that property and get it in shape and up to $400,000 marketability. And what that means is your out-of-pocket costs are going to be very minimal. You only have to pay the closing costs. And the closing costs will be about 4%, maybe 5% of what you borrow, which is that 300,000. So 4% of that is about 12,000, just using that example. And then everything else will come from my lender. So then you buy the property, you hire the contractors, you fix it up. And if you did all of that for 300,000 or less, when you put it on the market for 400,000, what are you looking at? Six-figure returns possibly. Because you spent 300 to get it, you're going to sell it for 400. Now you have $100,000 profit that you have just made. And it typically takes my clients about 4 months to rehab a property that needs to be brought up to speed. Then let's say you want to keep it because you want to have residual cash income. But then I have a debt service credit ratio purchase program that can be used for refinancing. Typically, when you purchase property using the debt service credit ratio coverage ratio, they ask for 20% down. Now that's pretty high, but when you combine it with the hard money approach, if you purchase the property for 75% at 300,000, it's worth 400,000. You can refinance it up to 80% of that 400,000, which is now $320,000. And that means you actually will probably walk away from the table with a little cash out, but you still have the house. And the only thing you need to qualify for that is to make sure that the market rent can cover the mortgage payment, which is the debt service coverage ratio. So combining these two strategies, you can literally get a real estate property with $400,000 in value for as little as $15,000 out of pocket. We don't look at tax returns. My lenders don't look at your W-2s. My lenders don't even ask if you have a job. So if you're retired, or if you're in between careers, or if you're self-employed and you follow strategies where you can report as little taxable income as possible because you don't want to pay the IRS, that's perfect. We don't ask those questions. Everything that we look at is based on the property itself and the property's ability to be profitable. So it makes it very easy to get into. So how does this work with what Chris does in the IUL? Okay, so you use the cash value that you have in your IUL so that you can find the down payment or the closing costs. It's really minimal. And your policy, though, is going to continue to earn. And then you turn around and your money will be working double time because it's going to have the protected growth in your inside And then using what I have, we're going to be accelerating some of your equity through real estate. So you're only going to be tapping into a small amount of it. And then you're going to come back to Chris strategically, and he's going to show you how using his tax strategies to avoid some of those tax streams, and then maybe even help create additional multiple streams of income. So Chris and I can partner to maximize your growth and your savings, because your IUL is going to grow, but then what's wrong with figuring out a way to make some of that grow even faster doing something else, right?
Mhm.
So that's what I wanted to share. I didn't want to go too deep, but I would love to talk to anyone that's interested. So they can schedule a discovery call with me. Click on that QR code. It'll take you to my booking site, and it'll give you an option. And it's just no commitment, no discovery. Never do I ask for any money to work with anyone. Every service that I provide, when it helps you getting financing, is at no charge. You don't give me any money up front. Any money that you do have to give goes directly to the real estate title attorneys, because we use real estate agents, real estate title attorneys to make sure that you're buying the properties and they're being put in your name correctly so that you have full ownership. But I'm also have my phone number, because if you're not quite sure if you want to book a call, but you want to have an informal conversation with me, you can text or call me, and I'll be happy to talk to you that way as well. It's just easier to get me if you schedule, but I try to be very flexible. So,
Yeah.
Chris,
Mhm.
again, thank you very, very much for having me here. I really appreciate it. I would love to come back if you ever want to bring me back.
Yeah.
And have any questions, if there's any questions.
Thank you so much.
You're welcome.
There you go. We are. Thank you for it. Yeah, I learned a lot. I learned a lot with the DSCR about the IUL there. Uh, there you go. So we're Lala. If you have further questions, I could reach out. I could give the information of Ramona, our partner for to grow your business. Okay, thank you so much for those
Oh,
who would like to follow. Just follow us on our YouTube channel or Waiko Tax, and you will be able to watch the replay of our presentation. Again, thank you. This is our business.
Chris, you're breaking in and out.